And you can see that we had a structure change in here with this massive commercial buy candle. So that's obviously something that we're now aware of. Now, that would be the buy break of the 79. You might be saying, so why didn't you buy it then? Because I was bearish. The value's been bearish, so I'm not going to buy it at that price, and I'm not going to sell it at that price either. You know, I'm kind of watching to see what happens now. So when we run the top edge stops, if you now, but the thing that you can now notice is at least we have that. You see, we now have that. I'm looking to run the stops. So because we've got that, and because we've got that blue line which is automatically generated, what else do you have? Well, I go from that arrow price. I don't have to make it up. It's on my screens. I go from the arrow price to the blue line. What does that do for me? It gives me my guaranteed premium price. It's also a measured move. There is my guaranteed premium price right there. Do you see it? It tells me where it's going to be. So if that's a guaranteed premium price, I have a very, very low risk sell trade. Now, obviously, I can do a couple of things. I can either then sell it when I get there, or I can wait to see if Max starts reversing out. You can see that Max started to diverge. First of all, it's diverging. Two, it started to reverse out. So we now know that we've got a very easy sell trade to now take advantage of. And with that easy sell trade, it's time to go. When I'm talking about going with the flow of all the lines, you can see there's very few trades that actually go with all the lines, but take a look at the ones that do. There was a trade here, for example. Do you see how this is going with all the lines? It doesn't matter what the order of the lines are. But all the three lines are bullish. You can still almost buy the bottom edge price here. If I do not buy that, I am in serious trouble. This is a brilliant, easy money bit of business there. And obviously the takeaway from that trade, 66, he's traded a high swing of 79 break. It was a $400 winner. And we just traded in the direction of all of the bits, all of the lines, all of the stories. We don't have to make anything up. We just simply played it as we've seen it. So anyway, I like this storyline. You can see we've got the dash coming back in again. And obviously what that means is that we've got an ability to now look at that and say, right, well, there's the trade that's setting up right now. If I like the sell value, what I'm going to now do is I'm going to look at that and say, right, there's my halfback. And I now have a target price already generated from that information right there. That's how good that is. So what is this price? This is now the cap buyer. This is now the cap buyer. That's what this becomes. So this becomes a cap buyer. So if I like the idea of fading this, this is exactly what I'm going to do. I'm going to buy that arrow and I'm going to go long at the arrow for a cap buy phase. And obviously I'm then able to watch to see how this trade develops and evolves at that point. The idea is to buy it here and then sell it at higher prices to join the party at a better price point.